Good morning, it's Harvey Jackson. Trade suggestions put out by Trump is suggesting China should be buying more soybeans from U.S. and that has the soybean oilseed market a little bit higher. Framework deals are uncertain, and even just trade in general is a little bit uncertain. And other countries are even striking up deals as this environment has caused some partnerships that have been long-standing, but pushing some of the others outside of U.S. together. Trump urges China to buy more soybeans. Just that suggestion alone, I think, when I looked at it, was like 22 cents higher, which is pretty strong. Bloomberg put out a article there on Friday talking about the tariffs starting to squeeze profits, and it's talking about just mentioned Trump, but it's not just Trump that's actually caused this. It's just the whole cost of doing business is just higher and higher. Fertilizers being the biggest one that's actually squeezing growers into higher costs, of course. Indonesia, Peru sign a free trade deal, and like I said, these alliances are building outside of the U.S. and as things keep on going, you're going to see more and more of this getting done because there's no tariffs for some of these countries. Here's the uncertainty, and I just highlighted the area in those discussions that the U.S. Secretary Lutnick and Treasury Secretary Bessent to ensure that the 15% levy agreed last month on Japanese goods was not stacked on goods as beef and tariffs. It's just that uncertainty of what they actually, the framework is suggesting. And again, it's only a framework. These are not deals, and yet there's tariffs going on. There's nothing, here we've got this, but it still needs to get figured out. It's got to get hammered out. Japan made another trip there to kind of get into the details of the framework. India Trump tariff spark calls for boycott of American goods. That's happening everywhere. Some of this could be backfiring a little bit, but it might not be seen in the U.S. economy. So as they are not the sole suppliers of goods, and profits could be going down on some of those international companies that are across the world, as you see instances like this where India just is going to boycott any U.S. goods. COPA data, I'm just going to go through some of the trade recs here. 11 just shy of 11.3 million metric tons crushed on that crop year, which is pretty good. But year to date is 87.4. So that uncertainty of trade has really pushed the quantity and the amount of stuff that's getting crushed, where it's going. Here's your canola setup that's been kind of playing out right now. The downward move that we're seeing, and now that's moved up a little bit as we talk about it today, just because of the trade stuff that's going on and suggestions. Here's your spring wheat, looking for a long at 610, and the market's gone down since then, but now it looks like it's a little bit up on spring wheat. Kansas wheat, here's your positions that we have here as well. Long futures, both of them are looking for some upside. Soybeans, new trade put on, long futures as well, but would be looking at exiting that short position. So we'll have to play into that one. Here's a corn position, and it's talking about short, and yet the corn is going the same direction as the soybeans right now. So we'll have to play into that. Here's Darren Fesser, just going through the corn trade.
To the September corn again, we were watching this July trend line here, right against this 9-day EMA. We did test this on Friday. We were above it, however. We did not settle above it. That's the biggest thing. We need to settle above it. If we can do that, I think we can muster some wins here back towards 393, 397, maybe some potential retests of that $3.99, $4 mark where we have that July high volume, or what we call point of control. Again, 376 was a pretty good low here. That was a Fibonacci 100% extension move lower. Again, I like what I'm seeing here, but this market you're going to have to prove it. Again, I am in the camp that these yields or this crop is getting smaller, not bigger. I know I'm probably against the odds here on that one, but that's just what my gut says right now. Now on that December corn here, coverage what we have on here is a total of 60% between futures, options, HTAs. Again, we're going to let some of these get exercised here at the end of the month. If you have September short dated 440 puts, 450 calls, or 450 puts, we're going to let those get exercised here, and that comes up here in a couple weeks. But again, I like what I'm seeing here. Big level here today is 408, obviously, and then Friday's high here at 411. Now, again, if we can get through here, I think that this market can get back towards this July point of control, which is right near that 68% retracement level. Now, where did I get that number at? It's this high back in July here, July 18th. To this most recent low. So I'm looking for the swing high to the swing low here, 413, 417. That's going to be that pivotal point here. If you can get there, that's a decision point. That's probably where you want to be looking to maybe reward this market. Every 20, 30, 40 cents, you're going to have to reward this market. And if you're rewarding it because, hey, I don't have the room for storage in the fall, fine. Look to re-own some March call spreads. I think they're really cheap, and maybe even take a look at buying the board here, on a right price. And again, where would I buy the board if I'm selling here? I would look for a pullback. If you can hold this 408, 407 on a close and close above it, I look for some good support here. But again, I want to be looking to buy March calls. They're very, very cheap. Now, taking a look at that September beans here. September beans above that 20-day EMA. Again, we have not been above here. The last time we were due here is, you're going on 3 weeks now. So again, I like the support here. What we've seen last week at 962. So again, watch this June trend line here very closely. We hit this on the November here in the overnight trade above the 20-day. We need 2 consecutive above that 20, and then we can confirm a trend change. Now, we did hold that 983 level back up, retesting that July point of control. So if we can get above this trend line, the next move is going to be slightly higher here towards 1020. 1019, and then a potential move towards 1030. We have a cluster of high volume levels working between that 1028, 1029. That would be your next move. So you're looking at about a 20 cent further move from here. September wheat is just continuing to follow what corn is doing, following what beans are doing. Again, watch resistance right at that 518.5 level. That's that 9-day EMA. We are honing it.
So I could actually maybe share with everybody the Fesser's report there, but just looking at the drought concerns that got highlighted on Friday by the nutrient guys, and they're looking at drought in some of those areas. And again, you got to remember, where is the harvest going to start? And it's going to start in this area. So you put drought in just ahead of harvest, it's probably a good thing. You can see there's smoke still coming from up north there, but there's actually a flood watch area there too, and you can see that there's this building of moisture going across some of those states, and it's actually a lot of moisture is putting some flood stuff, and you notice the moisture skirting across the provinces here as well. Here's the smoke. You can see how it's just kind of billowing and pushing down there. Here's just the GFS and the build. So you can, out to a week, there's maybe a hold of moisture, and then hopefully into the second week there, we can put out some of those fires. Same thing with the artificial intelligence, but it's showing, maybe a little bit more smoothed out effect, but it's definitely going to add some moisture there, like in the range of 3 to 4 inches almost. The last 14 days of moisture, and again, it's still a little bit dated, so there's a little bit maybe still getting added to this, but you can see where the moisture has fallen just in the last 2 weeks, and it's adding. But at this point, depending on what kind of crop there is and the stage, we could actually be really increasing the size of canola seed if we can get some good weather here. There's a little bit of pea action for harvest that's coming along, and this is not going to be a good setup for that for harvest. But anything that's a little bit green, the moisture that's being added or has been added is actually going to be a good thing for sure. So let's just have a look at the markets here. Canola is up 12, soybeans up 22, and the wheats are slightly up as well, and the corn is up as well. Canadian dollar is just slightly down. So here's the canola, and I put a second Fibonacci as if it's going to go back the other way, and you can see we're trading right at that first leg, and the moving averages are kind of stopping us from trading any farther. European rapeseed, there's this trend is definitely going down, but kind of getting held by the 23.6 retracement value, just not gaining any momentum until the harvest is pushed along maybe a little bit farther here. Soybean oil futures, nice candlestick kind of recovering from that Friday's down day, but we still have those moving averages above, of course. And here we are looking at soybean futures themselves, right up at that 61.8 that Darren Fesser was talking about, and some of those moving averages as well. So it's got to get up above this range here for some more sales to get added. Soy meal futures, nice recovery. Trying to trying to just kind of get back to a couple of weeks highs that we've been there, and it's trading at some of those moving averages that we're seeing there. Palm oil, nice leg up, and you can see that it stalled out at the 78.6 retracement value. The Canadian dollar caught in between some of these moving averages, down a little bit as I took that screen grab, but kind of just trading in this range now. Really, it's not doesn't look like it's going to have any direction. Here's a U.S. dollar. It's still supported on that support line, but it's at the bottom end of the channel. But when you look at this, when compared to the real, and they were comparing all soybean and corn sales, competing sales with them, you're at the bottom end of the range that we had set out. We're not. In other words, it's getting cheaper and cheaper for the corn and more attractive for the corn coming from the U.S. So here's your spring wheat futures. A little bit of recovery from yesterday's or Friday's down day, and it looks like it could be trying to break out of the slow stochastics as well. Kansas City, it's off the bottom, but still all the moving averages are kind of holding it. The same thing with the Chicago. And then your corn potential to break out, get through those moving averages here as well. So here's the NASDAQ. I never talk about it, but NASDAQ is bordering on making brand new highs. Gold, the same thing. And look at that, cattle. They're all going in the same direction. So look forward to summarizing tomorrow's USDA report, and we'll chat to you later.